Welcome to the Decent Crypto Podcast. Today is May 2nd. We have a special episode. We are joined by the research desk at Franklin Templeton Digital Assets. I have David and Christopher here with me. Welcome, guys. Thanks for joining the show.
Thanks for having us.
Yeah, glad to be here.
Yeah, absolutely. I think this is gonna be a treat for me and for Matt for sure. I think this will be a treat for all of our listeners. We've been waiting for this one for a bit. To kick things off, do you guys want to give a quick introduction about yourselves, what you guys do now, how you maybe work together, and what you focus on at Franklin Templeton?
Sure. So I'm Christopher Jensen. Been with the firm since 2015, where I started in the kind of credit group. Entire backgrounds on the buy side, alternative investments, private equity, private credit. Worked for an alternative asset manager in New York before joining Franklin, and quickly found the folks at Franklin who I thought were doing some of the most interesting and innovative investing at the firm. A gentleman by the name of Roger Pecor, or Roger Basin, who now runs all of digital assets for Franklin, and Tony Pecor, who heads up the investment strategies team for digital assets. And prior to our involvement in crypto, we were doing fintech lending and using machine learning models to underwrite little units of risk coming off of fintech platforms, and flowing that into kind of various funds. And so always at this kind of intersection of technology and finance. And when you're at the tip of that spear, it inevitably takes you to crypto, right? So been investing personally in the space since 2017, 2018. And we've been working to kind of build out the platform here at Franklin since about 2019, I would say.
And then David Alderman. I've been at Franklin for almost 2 years now, but yeah, help on the research side. And my background is TradFi. I worked in investment banking, focused on the energy sector for a while, spent some time in a macro fund, but personally got into crypto initially in 2017, but that was more buying the top, and then just kind of stuck around and got really, really obsessed with it, for the 2019, 2020 era.
I feel like this is like a one commonality across TradFi is that like we all buy the top and then get interested in it. Like when I quit my TradFi job December 2021, Bitcoin was at like 62K or something. And every time it goes above the price where I quit at, I have like a little like celebration in my head of like just pure vindication. Um,
I think that's across the board. That's not even a TradFi thing. It's every new entrant, every cycle, you just buy the top first cycle, and then the next time, you're ready.
Yeah, I mean, almost anyone that gets into crypto initially gets in because they see price going up so much, and of course, like eventually they convince themselves that they need to get into it, and they buy like when it's at super late cycle.
Yeah. And I think when it crashes, you're like, what just happened? But then there's kind of this fork in the road, and a lot of people, pivot and kind of leave the space and go on to other things, and others, have been bitten by the bug, right? Stop to think, okay, well, how can I do things better next time around? Let me take this bear market, or to actually learn about these protocols and kind of dig deeper. And so, I think those that do that, right, you're just, infinitely better set up for kind of the next go around, the next cycle. And, those in between the bull markets, there's usually a few years, right, where if you stick with it, it gives you time to kind of, brush up. And I think a lot of what David and I have been attempting to do in this space is, how do we kind of pull, best practices from all the various kind of TradFi disciplines that we've worked in or studied, whether that's, investment banking, kind of modeling best practices, as David mentioned, we both have some background in oil and gas, to, things that we would do in private equity or private credit, or evaluating, kind of tech firms, growth stocks, commodities, currencies. The beautiful thing about digital assets, right? It has all these different kinds of flavors, a little bit of a chameleon. And so how do you kind of use best practice from all these different disciplines to kind of evaluate this new beast?
So yeah, I think that's super interesting. I think a lot of people in the space that follow closely are aware of the reports that you guys put out, like the research that you guys put out. I think you put out one today about the Solana ecosystem and its kind of acceleration and adoption. And um, so how do you, first of all, like how do you decide what to focus on? How do you kind of choose what trends to look at? Like you said, the digital asset space is kind of a chameleon, in that there are so many different things to look at. It's kind of, it's everywhere, all at once. And so you could really take your focus in so many different ways. And then just kind of at a high level, like, what is it that you guys do, that, and like, how does it fit into the larger business of FT? And um, I know you guys are more focused on the research side, but I'm just curious, like, how that plays into the rest of the firm.
Sure, David. Maybe I can give some, broad context, and then we can kind of dive down, and I'll pass the baton over to you. So I think, yeah, understanding kind of where we sit in the firm, or at least in the digital assets group at Franklin Templeton, is important, because it also informs how we go about what we do, and kind of how these different subgroups kind of relate to each other, and it's very synergistic, right? So at Franklin Templeton, kind of digital assets, the way I think about it is, we have two kind of camps and two initiatives. We're builders in the space, and investors in the space. So on the building side, to start there, that's where you see our tokenized money market fund, and the work we're doing in real world assets, with the great folks at Polygon and others. And so we have in-house blockchain engineers, which is extremely valuable, especially as we think about having resources in-house that David and I can go talk to, right, about things, in addition to leveraging our kind of external networks. And then also on the building side of the house, it's supporting networks and ecosystems through running nodes. So being a validator on these different networks. I think we're running nodes on 10 to 12 different blockchains. So kind of all this I would put on the building side of the house. And then on the investing side of the house, basically it takes kind of two forms. One is venture capital, which is, our team is focused on very early stage, call it, kind of pre-seed, seed, series A. That's kind of the sweet spot there. And, kind of doing equity deals with some token warrants, basic early stage venture in the blockchain space. And then on the token side, that's where David and I sit. And we're focused on usually the larger, more liquid tokens or digital assets. And so when your question of like, kind of where do we start? How do we think about what to dig into? A lot of times on the venture side, they're really starting with like a problem, a technical problem, a philosophical problem in the space. What are potential solutions? Kind of like reasoning it from first principles, bottom up, and then kind of reaching out to teams, figuring out who's addressing this problem. What kind of solution do they have, and evaluating the merits there. And so there's definitely like a top down kind of component to it. I think David and I are, especially with our backgrounds, really kind of bottoms up. And when we needed to kind of initiate coverage on tokens and things that have the larger market caps, you start with Bitcoin, right? And you just start working your way down the list. Like what's our house view on Bitcoin, Ethereum, and just kind of working our way down. And then you get to the point where you've kind of covered enough ground at the top, and a lot of that tier of market cap, it's pretty similar. It's a big bucket, right? And so then it becomes, well, what's kind of interesting and innovative or new. And so we're kind of at the fun point where we really have that kind of freedom to kind of research and dig into anything that looks interesting. And I think in token land, a lot of tokens aren't great, right, as investments. And we're really looking for, the project might be great, and the equity might be great, but David and I can only invest in tokens. And so we have to have that third component. Like, is the token great, not as something to spend, but as is there a real reason to buy and hold it, put it in a portfolio? And so I think when you apply that last filter, it takes that investable universe and whittles it down quite a bit, right? But when we do find something that's interesting, I mean, maybe David, you can kind of talk about how we think about it. Once there's a project, that has a token, and maybe it looks interesting, kind of what do we do next?
Yeah, I mean, I think it's like you could, if you're on crypto Twitter too much, you end up getting fed and shilled all these different narratives or different coins or different tech and how this might be game changing for the space or whatever. Um, but really, like I think it's like a combination of things in terms of like how we think about like where what we find interesting, and that's there's things like I think Christopher and I are both very active on chain, just always interacting with, even like new if a new chain comes out, always trying to be on there, trying to interact with stuff, see how the ecosystem is working. Like one research piece we did was like on runes or ordinals, actually going on there, even just buying like a super cheap ordinal to kind of see like what's happening, how it's interacting, and then on the other side looking at like the bottom up analysis, like with fundamentals, like what are the fees of the protocol, how many users are using it, what type of users do you have. And so like if you see some sort of trend or the potential of a trend happening, is there any like fundamental metrics that are supporting that?
Um, why do you, so Christopher, you mentioned like most tokens not making good investments. What do you think are the dynamics that drive that?
Yeah, I think it's just that extra level of almost execution risk. Like you have to, like, first and foremost, I think you have to have a project that's creating value. So I mean that still is king, right? But even when a team can pull that off, I think to get that second piece right, it's just an add extra level of complexity, and it's all new, and so there's a lot of experimentation happening on the tokenomic design, just like there is experimentation happening with the actual underlying technology. And so I think to get the design right when this is brand new, it's just difficult, right? To have it, for instance, like how do you get the token, widely enough distributed without people gaming the system, too much, and get that balance right between kind of the initial float versus the fully diluted. Is it better to come out with a really high fully diluted, and maybe there's some conflicts of interest. Some parties and stakeholders want that, but maybe it's detrimental to others. And then this balancing act of how do you design a value accrual mechanism that really makes economic sense and derives value back to the token without making it look too much like a security. And so and what is the path towards progressive decentralization, like how do you get that right? Like, so there's just a lot of components, I think, to get right. And so it's difficult, but I think understanding a lot of that, and things like unlocks, right? I think a lot of people kind of gloss over that, but that is a huge gravitational force, and you might like the project, and you might think the value pool and the tokenomic design is interesting, and you go into the token, but you're just up against so much unlocked capacity kind of coming your way that it's hard to kind of fight that uphill battle.
Yeah, the unlock dynamic is so interesting, right? Because so much of crypto is about time horizons. And
Yeah.
like, if there's a project that has an unlock in 11 months, I might not actually care because in 11 months, I'm supposed to be cashed out to my yacht, right? um, and like, I think a lot of projects, maybe this is one of the reasons why people like new tokens. Like we've seen a lot of this meta play out this cycle. Solana DeFi is a good example. Like you look at Jupiter, right? And it's like that token comes out and it's like new token good, right? And as soon as like macro is somewhat supportive, it moons and it's like bigger than Uniswap, right? And the question is like, okay, what are the dynamics that drive that? Is it that people want to be bullish Solana? Is it that it's like the only option if you want to be bullish on Solana DeFi, or like one of few, right? Is it that like there's just like a smaller circulating supply relative to FDV, and so the liquidity dynamics come in? Um, and then like over what time horizon do you actually want to hold these things, right? Like the majors, like Bitcoin you can hold forever, right? But when you look at something that launched in the last 2 months, like you really have to think about when do I want to get out of this position?
Mm-hmm. Well, I mean, a classic example is Lido, right? One of the most successful DeFi
Yeah.
projects out there.
Hmm.
They make their revenue is really really high. They've grown revenue every year basically. But the token is traded between like $1 and $4, and but the market cap is up like 20x since inception. So, and that's just unlocks.
Pretty
Hmm.
interesting. Um,
All right, should we go into some of the stuff that you guys have covered over the past? I don't know. I've been following your work for the past like 7, 8 months. Uh, but I think you guys have been early to spot trends, and you're continuing to put out really really cool stuff. So maybe let's get into some of that stuff. The first trend that I think we talked about this a little bit offline yesterday, or in our pre-call, but was just being very early to the Solana ecosystem. This was early last year, mid last year, when a lot of people had already written it off, when there were tons of kind of L2s fighting for mindshare. It was really like Optimism, Arbitrum, Solana kind of lumped into the same group in terms of all having relatively the same amount of activity. And things hadn't really popped off for Solana at that point. I think you guys were early to identify that. I know I kind of got it secondhand from David shilling Matt, shilling me, to just jump in on Solana, and I went kind of full force, and that was game changing for me personally. So I have to thank you guys for that. But yeah, like what kind of convinced you that Solana was going to be a big trade for this cycle, a big mover, early mid last year, and yeah, like even maybe we can touch on the work you put out today, which I personally actually haven't gotten a chance to dig into, but I think it's a perfect opportunity to line that up for you guys.
Yeah,
Yeah, I mean,
David, I'll let you go into it, but it's interesting the walk down memory lane of the context of where the market was during that time and place, right? And so like getting close to 10, and the question of is it going to go single digits? And I actually remember listening to one of your guys' podcasts around that time, where I think you were taking different sides of it, and I think it's just a great example how like I think everybody was sharpening the pencils at that point in time, because that almost like fundamental existential risk question for Solana really surfaced then, and like I think everybody had to do their own work to determine is this project going to die, or is the baby being thrown out with the bathwater here, and is this just an incredible opportunity? And so we had underwritten it or initiated coverage on it prior to that, but you have to sharpen the pencil and just kind of redo all the work and just like test all the assumptions. And so when it was below 20, when it got to 10, and right, it actually went under 10, and that's what it was like. Oh gosh, how low is it going to go? And so I guess we had refreshed all of our work, and pretty extensively. And I mean, we ended up with like 40-page investment thesis on Solana, and ultimately got conviction around it. But maybe David, you can highlight like what is our Solana thesis, I guess, in a nutshell, and how did we kind of get that conviction?
yeah, I mean, it's when FTX blew up, that was crazy. But I think I think it was fair. Like initially, everyone was really concerned that like Solana would not survive post FTX, and after the first couple of months, I think that's probably a fair take, because like who knows, like if are people really going to come back, and there's so much backlash, and like do developers really want to come onto Solana um, because of this FTX like hangover, that sort of thing. But I really would say like by like summer 2023, it was pretty obvious that Solana had some like really unique projects that no other platform had. Yet at the same time, it traded as if FTX was still
Yeah.
a massive overhang, and it was still at like $20 throughout the summer. And then I remember like maybe June, July, 2023. the SEC like sued Binance and Coinbase. It listed Solana as a security, and it like goes below 20 again, goes to like 15. Um, but at the same time, you had projects like Jito or Jupiter that were like really cool. You didn't see them on any other platform or any other, uh, blockchain or network. Meanwhile, you could go to the other top Altel ones, like it's like the Avalanches of the world, or Aptos Suite, etc. And those were like, I feel like they're still trying to figure themselves out a little bit. Versus Solana it seemed like it had a community and it had a lot of unique projects on it. And to me, it was like, okay, like if anything, you could easily bet that there's going to be a mean reversion trade, that it's got to come back to some extent. So like there's just a lot of asymmetric uh, opportunity with Solana in 2023. And then also, there's other data points like if all the podcasts that are out there, right? Most people are always talking about Ethereum or all the layer twos. And if you go to the other Altel ones, the Solana by far had more interest than any other network. Like I think on Bankless or something. I think on Bankless they had some Solana projects on there like 3 or 4 times in 2023. And no other, like outside of Ethereum, it was like Ethereum ecosystem, then Solana ecosystem, and then everyone else got maybe like one episode. And so it's just like if once Bitcoin finally kind of found the bottom and started to accelerate higher, it's like Solana was primed. It was
Yeah.
primed to go. On
I think
top of the
another
fact that like the fundamentals, the tech is good, that sort of thing. So
Another key part of I think the thesis too is like you're constantly thinking in terms of scenario analysis, right, and just probabilities, right. And one of the ways we thought about it was, I think the whole market's wondering what's kind of the next big thing and breakthrough, and we had obviously NFTs and DeFi, and it's like what's next, right? And
mhm,
when you look at all the different things that could be next, could be that next big thing, that 0 to 1 breakthrough, we just thought that kind of a surface area wise, Solana probably has the highest probability of one of those things taking off on its chain, in its ecosystem, whether it's DePIN, right, really taking off, and Solana has strong market share in DePIN, and you start to see the network effects, right? It compounds among itself, because new projects will will migrate there. Oh, okay, Solana's the DePIN chain now. Or payments, you start seeing a lot of kind of critical mass momentum happening in payments over on Solana. Or gaming was always kind of had a little bit of some
mhm,
energy, but I think that that's starting to kind of pick up. Obviously you have the Saga phone, whether that takes off or not. It's just you have enough bets, diversified bets, and you just need kind of one of these to really hit, to bring in that next wave of users. And we thought, due to the underlying technology and the kind of critical mass of the community in the team, it had all the right kind of features that you needed to put the
mhm.
put the bet on Solana. And then when you
It
realize
has
that
like a
most,
lot of call options, right? There's
yeah,
a lot of
exactly,
call
yeah.
options.
And I think you realize then too, like most funds were underexposed to it too, right? And so it's just a matter of, once people start to, so it's kind of a contrarian play at that time. And then once kind of people wake up to the idea, even if it hasn't hit yet, right? We still don't know what the next big thing is, but now it's a little bit more of a consensus view that, okay, there is a good shot, maybe it happens there, and they do have a lot going. And so when people realize they're underexposed, just from a flows perspective, it helps kind of that mean reversion that David talked about.
Yeah, I will
I
say
see.
I did not see the meme coin piece. I did not see that one coming.
Honestly, I don't think anybody did. That's one of the pieces where, even if you saw the rest of it, because I think, like, when you lay out the thesis like this, it sounds so obvious in retrospect, right? Where it's just like there's just way more possible on Solana that you couldn't do on Ethereum, that you still can't do on Ethereum. And so once you saw that, like, a lot of people are optimizing for low gas and fast transaction speeds, but when you see that people are actually building on this chain, there's like an ecosystem that's still there throughout the bear market. There's all these projects, and like one of them could pop off, like the framing of you basically get a ton of free call options, and one of them could kind of rip. I think it just sounds so obvious in retrospect, but it's much harder to do in the moment. But like the meme coin aspect, I don't think anybody saw that. It was like all meme coins forever will just be on Ethereum. That's where all the liquidity is. People are not going to, gamble, with this. Like it's too easy to sell. Why do you guys think that is? Is it just easier to access? Like you just get a phantom. Like my 15-year-old cousin. I mean, I guess it's an easy thing to answer. My 15-year-old cousins are doing it. So, yeah,
Well, I mean, specifically with meme coins, though, I mean, I think it's actually, maybe it's like November 2023. You even saw Solana NFTs make a comeback, right? But also Bonk, right? Bonk was the meme coin
Yeah.
on Sol. I mean, I guess it still is. It's like the culture coin on Solana, I guess. And that one ripped once Solana started to take off. And then I think just because it went so high so fast, it just created a frenzy to create new meme coins, right? I mean, we have thousands of meme coins on Solana, and then like there's like the top ones. What the top ones now are like Dog with Hat and like maybe Bowden.
Yeah, it's I mean, one interesting thing though is like, okay, so yeah, I can explain where I came at Bonk from. So it was like, okay, clearly there's this Solana reversal trade happening. Everybody's underexposed, if not like offsides by shorting it, right? And what goes up the most if the native token goes up? The dog coin, right? And this was like a playbook from last cycle, right? And at that point, Bonk was the dog coin. And so you saw it go up. There were days when it was up over 100%, like really early on when it ran to like 100 million in that first leg. And then from there, I think part of what's interesting about this market cycle is that like this cycle, retail really isn't here. It's a lot of crypto natives. And as a result, people tend to kind of have the same playbook, right? Everybody saw the dog tokens on the respective chains run last cycle. And everybody wants to just chase the really high beta stuff. And so, you see this on the Twitter timeline, right? Where like Bitcoin can be down 10, 20% from all time high. And everyone's in like max pain because we're all like super over allocated to like way down the risk spectrum because we're like that's the playbook. Bull market starts, you want to be like really buying the spicy stuff, and leverage is harder to get these days and like more dangerous, and so why not just buy like the super risky meme coins. One thing though, and then I think like when Bonk really ran, it created this like it opened your mind to this possibility that like Solana meme coins were legit and they're easier to trade than ETH meme coins because of gas. And once you saw one run to a billion, it was like the door was open, right? And you could believe. One question I have though is like, what do you guys think of like why hasn't the meme coin thesis really played out as hard on any other chain, on any like super cheap L2s or anything? Like it's not just the cheapness of the transactions, right? Like what do you think it is about Solana that enables memes to get bigger versus like on Base or Arbitrum?
And one thing that comes to mind or two things. One is the UX of something like Jupiter, I think is just arguably second to none. And so yes, there's other chains that can offer really low fees, right? But I think even just kind of normies in my neighborhood who maybe have had a Coinbase account, but now are like, hey Jensen, how can I get a Phantom? What's this thing called a Phantom wallet, or how do I get onto Solana? I'm seeing in real time it be like a Trojan horse for crypto, and really the only kind of DApp that I feel comfortable sending them to is something like Jupiter, because the experience is pretty good, and so I think that plays a part in it. So the low transaction fees and kind of quick transaction times most of the time it going through, and just that user experience. And then I think also because Solana had like that NFT culture beforehand. I mean, one of the losers of the meme coin is NFTs, right? Because I think they've stolen some market
yeah,
share, from NFTs, and you can play it at smaller size, which I think is key for people. Like, cause, a lot of these people look at a really expensive JPEG and like, they're priced out, right? And so hey, I can throw, X amount of dollars at, my favorite meme coin, and it's fun, and it's easy, and it's quick. That feedback loop is really fast, and it's more liquid. And so I think the combination of having, a better UX through something like a Jupiter, and then an established kind of NFT community that is just easy to kind of take some of those dollars and mind share and market share over to meme coins, I think also helped.
But I think it's also too. It's like the meme coin activity or all the economic activity on Solana. It's kind of like the town hall, right, where all this like degen activity is happening. And like, do you want to go to another ecosystem where that activity is not really happening, and you just hope it kind of comes there? I mean, we kind of saw that on Base a little bit, but at same not to the same extent, right? And then I think we even saw like base fees went through the roof, even though even though it's a layer two, just because there's a lot of activity on there, and it's not necessarily it has similar gas fee dynamics that ETH does.
I guess a good point to ask, like, what's your guys' take on Ether and Ethereum, the ecosystem, and L2s? Like, it's a loaded question. What do you think?
Go for it, David.
Yeah, I think with Ethereum, I think there's just so many questions, right? Like I do buy, like, it's the number two asset in crypto. It still has the highest TVL. It still has like some of the highest fees. Well, maybe not as high as Bitcoin since Runes launched, but still like ridiculously high fees. But there's just so many questions around how Ethereum is going to accrue value and how it's going to grow, right? I mean, you look at like the layer twos. There's like, which layer two? Like, is there going to be one layer two? All these different layer twos, or is it like a application specific layer two? Then you have the question of data availability, right? Does it make sense for a layer two to have like alt DA versus using Ethereum DA? Some people at the Ethereum Foundation say that if you use alt DA, it's not a real layer two, in which case you're actually not um, getting any Ethereum security. And so there's just so many questions. There's so many questions on what's going on, and then on the other component is that each layer two kind of acts like its own ecosystem, right? So it feels so in some sense it almost feels like Ethereum's scaling roadmap has like fragmented its own network effects, at least from a user perspective. So it's
Yeah.
just, to me, it's just a lot of questions.
And I think, I mean, obviously, that one of the biggest things so far in 2024, right, has been the introduction of the ETF complex and what that can do from a flows perspective and whatnot. And that's driven Bitcoin outperformance, and that's rising tide lifts all boats. I mean, that's been the biggest driver of the market, right? Year to date. And I think we're in the camp with respect to kind of Ethereum ETF. And again, I guess we should, disclaimers, right? This is just David and I talking, kind of personal views. None of these are house views, but we think it is a question of when, not if, but who knows when the when is, and certainly the market has wildly changed its prediction of when, and I think when the market re-rated the probability of an Ethereum ETF in May from being high to now being non-existent in 2024. I mean that's just, I mean, you can see it, right, reflected in market prices. And so I think the combination of that plus attention and mindshare being on other chains and all the fragmentation that David spoke to, and now I feel like the market's almost leaving Ethereum for dead, right? And so, I think on the token side, we look at everything from a fundamental perspective and are aware of narratives in the rotation game and whatnot. But you always have price. You always have and so at some point, price makes it interesting again. Just from an upside downside scenario. And I think if you are in the camp of at some point, don't know when, but the Ethereum ETF will probably go through. We already have a futures ETF for it, right? So And I think once you get past Ethereum, I think then it's a debate like, well, what would the number third one be? And that one there's not a clear consensus. But I think most people would agree. Ethereum probably is next in line, and if and when that happens, if it's at all like how it happened with Bitcoin, it's going to be a big deal. But yet right now it's quite beaten up in price, and so I think it does get interesting. I think you also probably have a lot of institutions and enterprises that there's something to be said about Ethereum layer one security and the use case there. I think just because from the individual's perspective, doing things on Ethereum is painstaking, and you might prefer to do it elsewhere. I think if you're an enterprise or an institution, there's probably still a good use case there. And these questions that David raises or alludes to, they're also opportunities, right? It's just yeah, but having a view of, and I guess Matt, you brought up the question of timeline and your time horizon. I think that's another key thing too, right? So over the long run, it seems like very legitimate asset, probably not going anywhere. It probably is beaten up on price, but what's better to own over the next month? Maybe there's better ideas.
Yeah. But on that too, it's like, I mean, a classic example is back with Base, which is just in 2021, all this NFT activity, all this DeFi activity was really happening on Ethereum mainnet.
Yeah.
Like it was all happening there. So like you really had to buy, if you wanted to participate in that entire ecosystem and all that degen activity, you needed to buy a lot of ETH to play around. But now, for example, like if that activity is now happening on Base, then actually instead of the value accrual going to the base layer to the mainnet, it's actually going to Coinbase,
Yeah.
right? And so then and a little bit of optimism, right? There's a little bit
Yeah.
of optimism, but then on top of that, I would say it's like in some sense maybe that's exactly how the Ethereum Foundation wants Ethereum to be used, where it's kind of used as money. And but in that case, yes, okay, great. The ecosystem is growing. ETH is being used in these different ecosystems as kind of the for gas and that sort of thing. But I don't know if that necessarily bodes well for the value accrual of ETH.
Yeah. I don't know if you can compete both as a smart contract platform and as a money. Yeah, I don't think you're optimizing for either. Um, okay. One thing you mentioned, David, is fees on Ethereum, and then you mentioned that fees on Bitcoin have gone crazy because of runes. And you guys, this is another report you guys put out that was super interesting, which was about ordinals, and this is also relatively early before most people had really jumped in. Um, how did you kind of go about researching this whole space? What is if you could maybe summarize your thinking, your thesis around ordinals today, and how you're looking at runes. I don't think you guys have published anything about runes, right? But yeah, maybe you can share how you're going about it.
Yeah, we published something on runes like last
Oh,
week.
you did?
Yeah,
like right
Oh, okay,
before
I
yeah,
missed
yeah.
that.
halving.
And then I don't know, it was like maybe a month or two ago was the ordinals thing.
Okay,
Yeah.
okay. Well, yeah, I will expand the question into the runes report as well.
Yeah, I think I think first of all, I think everyone that's been in researching and around crypto since like summer 2023 kind of knew that like Bitcoin had kind of or the development around Bitcoin had reignited, right? We had the ordinal theory develop like about a year ago, and then you saw the first like inscriptions and NFT collections on Bitcoin really start to take off in like maybe like June or like May last year. So I think everyone kind of knew that hey, there's kind of a reignition of Bitcoin development. But there's a lot of questions on like, is it going to be Bitcoin layer twos? Is like what NFT collection would you want to own potentially? Which ones are going to be the winners? But only recently this year did it really seem like there were winners. Like there were some NFT collections that had started to like get ahead of the pack pretty materially. Um, and I feel like that, because of that, it just really de-risk any potential like investment you wanted in like Bitcoin NFTs. Because it's easier to like get in when you, instead of buying one and just like it just, the project just rugs like next day.
And you want to talk a little bit on runes too?
Yeah, runes. Well, runes. I mean, I would say runes is kind of like where, I mean, it's similar where we had this fungible token standard BRC20s on Bitcoin that also sort of took off. We only saw really one coin take off, Ordi, uh, and that's really because it got listed on Binance. And so this new fungible token standard is really interesting, but it's also super early, and we'll kind of see where it goes. But the Bitcoin infrastructure around runes is pretty limited right now.
Yeah. Do
Um,
you see much changing there? Do you see like much being built around the runes kind of like meta protocol, like
yeah, I
is
mean,
it possible to have an actual dex? Do you see yeah, like
mhm.
is this
well,
going to be like the actual breakthrough that lets people trade meme coins on Bitcoin?
well, really, the key with runes is that it doesn't have it's more efficient than BRC20s. BRC20s left a lot of junk on the chain where they leave a lot of junk UTXOs, and so it was just bloating the Bitcoin blockchain. And Runes is just a more efficient token standard where it's not leaving any of that junk behind, right? But it still has similar problems to BRC20s in that you can really only do block trading. So it's, even though it's a fungible token, it's kind of feels, whenever you're trading it on chain, it feels like you're trading NFTs. Uh, but so um, there's still a lot to get worked around on how to like actually make that happen. I mean, there's some like early developments. Some Bitcoin layer twos are working on that. There's some new Bitcoin proposals to like change part of the blockchain to make that happen, but uh, that's about it. So it's
Okay.
still super early. Yeah,
Yeah.
yeah.
Yeah. I
One
feel
to
like
watch. One to watch.
yeah, I feel like Runes is it's gonna be tough to live up to the hype just because everybody thought just out
Hmm.
of the gate it would be great. Like it would just
Yeah,
everything would just
that's
work.
just like
And
the ordinals in
yeah,
early last
exactly.
year, right?
Yeah,
Everyone thought,
yeah,
oh, these
exactly.
things are going to multiple bitcoins, like multiple Bitcoin floor or whatever. And
Yeah.
in a sense, they were right that like, oh, ordinals is going to be a big thing, or at least it has been so far. But uh, it's it takes a long time for people to build infrastructure to support all of that, right? And now we have like like Magic Eden is like has the most ordinals volume, but like they didn't really support ordinals until I don't know, 6 months ago, something like that.
Hmm.
And now it's kind of getting to the point where it feels similar to trading NFTs on Solana or Ethereum, minus the 10-minute block times.
Yeah.
How do you think about
Do you?
uh, the product market fit of Bitcoin, like layer twos and DeFi and ordinals and runes with the Bitcoin customer? So obviously, multiple different kinds of Bitcoin segment, customer cohorts, right? OGs and casual Bitcoin owners, or now people who just put it in an ETF and set it and forget it, right? But you know, do Bitcoin owners, to what extent do you think they want to engage in DeFi, buy an ordinal, or branch out into now runes? For anyone on the call.
Yeah, I don't know. I think it's tough. Like, I think there are people that will for sure get engaged. Like, I mean, to like, I don't know today what the market cap of all ordinals and all runes is, right? Like, it's probably it's like a few billion, maybe. Um, so not very high in the grand scheme of things. I obviously expect that to expand quite a bit, but like this whole idea of like, okay, Bitcoin is the biggest chain, it has the biggest, OG whales and holders, and they're all going to funnel all this money into it. I don't really see that. but I do think that there is a lot of potential for like different kinds of applications, like not necessarily the Bored Ape model that you saw on Ethereum, but I do think you'll see different kinds of whether it's like utility or whether it's just like different kinds of projects. Like actually today, right? Like I think Michael Saylor or MicroStrategy announced that they were doing something with ordinals around like decentralized identity or whatever it is. I mean, you hear decentralized identity come up like every 4 months in this space, and it never goes anywhere. But it's interesting. MicroStrategy is a different type of player, like you mentioned, right? They're not the kind of Bitcoin customer who would typically be a degen and like do a shower for a Taproot wizard or whatever. But now they're entering the game, so. I think that it's going to enable different kinds of applications and different kinds of use cases than um, what we've seen in the past. Probably less like certain things like less degen, less speculative, just because like you don't really have smart contracts. Like it's just like you inscribe it and then it's done. It's just there, right? Like there's not as much you can do. You can't really enforce any kind of royalties. You can't. It's just limited, right? But in a way that's also a different kind of design space that lets you do other kinds of things. So I do think we'll see experimentation that's very different from what we've seen before, and that's also catered to different kind of customers. But um, I do think it'll look completely different.
Yeah. I mean, I think one thing too to watch for, like on ordinals, is we've seen this new meta of airdrops to NFT collections. Like the Pudgy Penguins keep getting a ton of airdrops, and then we saw like Mad Lads and Tensurians get some, and a couple other collections get airdrops. But I wouldn't be surprised if that continues on Bitcoin.
Yeah. And I also
Yeah, I
think,
mean, that was part of the runes hype, right? Was these like rune stones getting airdropped to holders of
Yeah, but
like Bitcoin
the runestones
puppets
were
or
created to basically for the airdrop.
yeah.
So
Um, I mean, okay, so I'm like local I'm like the local ordinals runes bear. So as you know, like I've only touched this stuff once. I minted Maxi, which is still my favorite like meme coin on Bitcoin. And that was over a little over a year ago. And at the time, it was just like, I think you're right, David. Like, Bitcoin frogs were the biggest collection, right? And it was like not easy to underwrite their staying power. And I think in general, when you can't underwrite staying power, you need to have liquidity, right? Like, that's where liquidity becomes the most important. So when I'm trading like a meme coin with an AMM on like Solana or Ethereum or whatever, there is some amount of like USDC or ETH or whatever that at any point in time I can see on chain what's extractable for me if I give up on this thing, right? If I change my mind. Versus with NFTs, like you don't have that. And even with like the fungible tokens, they do feel quite a bit like trading NFTs. And I think this is one major part of why is because all of the orders are block orders, right? Even if you break it down to just like an individual, one ordi token or whatever, that's still one block order, right? Like, and until we have this like kind of smart contracting mechanism or some kind of like liquidity guarantee that like as a buyer I know that there's a bid there waiting for me, um, until that happens, like it's going to be really hard to attract speculators, and they're sort of like the fervor behind all of this, right? um, and so I still think that it's too much of a philosophical jump for people to ascribe value to something that only works if you're running like a non-consensus client, right? Or like a client that has an additional layer of smart contracting or of scripting on top of it, the way that the ordinals client does. And I think who operates these things, right? Like if I think about like what is the actual value of a Bitcoin puppet, right? It's that like I can send a transaction at some point in time and some of the nodes that are parsing the Bitcoin network are going to behave in a way that like ascribes that some value, right? If I like try to sell it to someone, and who's running these nodes, right? Is it like hobbyists? Is it just Magic Eden? Is it Binance now that like Binance has listed them? And I think, you know, it's still, you could argue this about like pretty much any blockchain, right? That like who's running Bitcoin like full, you know, full historic nodes, right? Full archival nodes for Ethereum. But at the same time, like they have one less layer of social coordination required to make the thing happen, because the Ethereum clients, they all parse transactions on the EVM blockchain like the same way. Um, I think for this, it's like it's just too difficult, right? It's like it's too difficult to sell. And if it, you know, if you don't know that you'll be able to sell at any point in time, it's much more difficult to attract speculators. Um,
Well, see, I would agree with you that if its current state remains the current state, it's going to be a problem. But
yeah,
I would bet that like we're going to see a lot of experimentation on Bitcoin, and so something's going to happen. Like now, obviously, I mean, similar to the Bitcoin frogs, where they've kind of lost their place as like the top NFT collection. Now they're kind of further down. We might see more of that, more shakeups like that. But uh, I still feel like, broadly speaking, like Bitcoin ecosystem is going to have continue to just expand.
And I think a key point there is because it's starting off with such a small base too, right? So even if the degen appetite of the Bitcoin ecosystem isn't as strong as Ethereum or Solana or whatnot, like it doesn't need to be to have, I think huge kind of investment opportunities, in that space because you're starting off such a small base. And there's enough, I think, kind of customer appetite for, speculating whether it's an ordinals or this new kind of token standard with runes. And when you open up the design space, yeah, I think it's early days. The infrastructure to support it. I mean, I had issues like over the weekend one time, but already like a week later, I saw like it was a little bit better and some improvements were made. And so, I think there's a lot of runway there. And then, kind of zooming out, I think in general, like we're in the camp, like this is just good for, Bitcoin network economic sustainability, right? So still a lot of experimentation, but to have part of the economic model be driven from additional sources of fee revenue, that's probably a good thing, right, for the longevity of the network. And so long term seems decent, and then short term, I think because again you're starting off such a small base. And it's still such early days. There's probably some good room to run there, but it's a question of kind of where and when it will mature.
Yeah, and then even on that, like if we continue to see all this kind of economic activity on Bitcoin, another big question is MEV, right?
Right.
You have these 10-minute blocks. That's a lot of time for somebody to come in and snipe or arb away some sort of some opportunity.
yeah, absolutely. I mean, Bitcoin MEV is it's already a thing, right?
Yeah, it's a thing, but it's like it's pretty. You don't have flash bots or the Jitos of the world or anything like
Mm-hmm.
that. But that's also extremely early days.
Yeah, I feel like mining pool operators really should enable some kind of like a
Yeah,
bundling service, right? But I agree, it's good for Bitcoin overall, which we all love Bitcoin. It's so interesting because like we all joined early enough that we love Bitcoin. And like a lot of people that I talked to when I was working at Polygon, like they would not love Bitcoin. They'd be like, "Oh, it's such a waste, proof of work. Why do we need
Yeah.
this? Like, what the hell, right?" And for them, the sort of like security mechanism underlying any blockchain was something that they like just abstracted away completely. And for me, it feels like it feels something about it feels wrong, to like not love Bitcoin like truly. Um, but I also wonder like, you know, whose incentives are there, or like why do people want this stuff? Why do people want like Bitcoin DeFi, Bitcoin L2s, Bitcoin NFTs, fungible tokens on Bitcoin? Like it feels like there's so many hoops to go through and so much friction for the user and so much remaining to be built just to bring it up to sort of the same standard of user experience that you expect from not even like Solana, but like, Ethel 1, let's say, right? Why do people want
Well,
this? Like, who's incentivized to do this?
Well,
What
I think it's the exact same premise that you just laid out, where it's just like people don't even question the security assumptions of something like, well, let's say Polygon. In the same sense, like there are a lot of Bitcoiners that legitimately, fundamentally don't believe in the premise of Ethereum. Like, just like flat out, like just don't believe in it. Like even Casey Rodarmore, the creator of ordinals, like he just flat out calls Ethereum a pre-mine scam. So, which by the way it is. Only half joking. So I think that is the customer base, or like that. Those are the people that want this, right? Like the people that who like literally haven't touched their Bitcoin in years and like have the lowest time preference on planet Earth, and just like will never touch this stuff, but do you still want this exciting world of DeFi and all this other stuff that you can do with crypto? But they just don't want to ever leave the sanctity of Bitcoin. So,
Well, it's like,
and I do think,
well, no, I was just
yeah, go ahead.
on that. I was just gonna say, like, I mean, over the past 5 6 years, the only things you could do with Bitcoin were like centralized options, like CeFi stuff, and then
Yeah, yeah.
all that blew up.
Yep.
So if anything, they're probably like, okay, well, like I'd like to use my Bitcoin for something. I'd like to use it to earn
Hmm.
yield potentially in some capacity, or anything. I don't know, anything. And so like, yeah, like it would be great to be able to do that with just native Bitcoin and not have as much counterparty risk.
the Okay, so the reason that that argument doesn't hold water for me, though, right, is that the cognitive jump you have to make to be down with Ethereum, but like, or like, like okay with Ethereum, but uh, is like X, right? The amount of cognitive buy-in you have to do to like get on board with like an alternative client software that whose rules are not enforced at any level in the base protocol, like ordinals, that's like a way bigger jump, right?
Mm-hmm.
And then I think to date, like every Bitcoin L2 has also sort of like required that same set of like trust assumptions. I don't. I think I'm not the only one that in the room that's thinking this, but like they're all scams, right? Like none of them inherit security from Bitcoin. Like it's been the same thing since stocks, but it's like it's a good swindle, right? Because it's like, okay, we have all of this liquidity, all of these whales, and if we can even get like 1% of them or whatever to bridge to our Bitcoin L2, that's an amazing amount of TVL. But like, what are those whales doing? Well, they're like pre-seed investors in whatever Bitcoin L2, and so like that's the only reason that they're down, right? The To me, the security assumptions you have to make for a Bitcoin L2 are just like way beyond anything anyone, like if you're going to do that, you should just use a centralized exchange, right? Because then at least you have some callback if like in the legal world, if like shit goes wrong. But if you're like really hardcore and you haven't touched your coins in 6 years and you have the longest time preference of any human in existence ever, then like you're not gonna like trust some like Guardian bridge that like where you send your Bitcoin to like one address, then it gets bridged to the L2, right? And then you also probably are not on board with this like alternative software, client software like ordinals, where it's just like who even runs these things. um, so I think like I just feel like the overlap of the Venn diagram between true like people that won't touch Ethereum because they consider Bitcoin like a sacred chain, and people that are willing to take any level of incremental risk. I think the overlap there is extremely small, right? And so that's my bear case.
Yeah. I mean, it makes sense. I mean, I think that's part of the fun of the job, right? Is the different scenarios and the ways it can play out. And, there's absolutely, that's why I kind of led with that question of, who do we think are going to be the users? All the people that own Bitcoin, what percent, does this kind of satisfy a need or a want, for them? I do think there is enough, kind of desire to whatever this means, make their Bitcoin more productive, but in doing so with the least amount of additional trust assumptions. And I think, to your point, like where we're at now, you still have to make a lot of trust assumptions, right? But you can envision a world, and we know it's coming, right? Where you'll be able to make your Bitcoin slightly more productive without having to take a lot of extra risks. And it might not get to the point where we see it on other chains, but I don't think it needs to. We'll see.
Interesting. All right, more questions. I mean, I just gotta ask, like, and you guys don't have to answer, but what's up with Stellar? Like, I see the only place I've seen Stellar in the last 3 years is on the like Franklin Templeton, like doing stuff there. And I know you guys aren't really like involved in that side of the business, but like, do you hear anything about it? Do you know anything about what's going on there? Do you know if they're users?
Yeah, and so Stellar being the first chain that we launched our tokenized money market fund on, and it really goes back quite a few years, right? So I think we had begun work on that in, I don't know, 18, 19, something like that. And so, yeah, they were one of the first chains that we kind of launched on, went live on. And still to this day, it's probably the one where the most, TVL and activity happens. Since then, we've kind of added several other chains in the process of, adding more. But the thing with Stellar that's been great for us is it's really low cost, and with this product, and we're trying to abstract away all the crypto and the blockchain components, right? So it's not at all obvious to the user, kind of which chain, and we kind of like that. It's low cost. It has all the benefits of blockchain here, being low cost and everything's visible on the blockchain explorer, and that sort of thing. Because it's low cost, right? We can pass through some of those cost savings to the end user, the end customer. So it's been great, but obviously we didn't want to just be there, and so hence we've been expanding to other chains. I think every so often, again, we're not on that team, but just in the space of talking to various folks from different ecosystems, we have touched base with them relatively recently, and it sounds like there's still a lot of development going on there. They're introducing smart contracts. But David and I probably spend less of our time from an investment standpoint in terms of looking at new protocols, new tokens. But we probably don't spend that much time in that ecosystem. But because we are kind of users of that ecosystem on the other side of the house, we do touch base every so often with them.
Cool.
Do you two have any areas where you're like in strong disagreement right now?
Strong disagreement?
Yeah. Like with each other?
That's a good question.
Yeah. Cats is one of them. Whether it's
What are you talking about? Are you talking about cat meme coins, or are you talking about quantum cats?
or cat NFTs? I've never really gotten into the cat NFTs, and I know you have some cat love.
I have cat exposure.
You've probably seen that argument or analysis going around crypto Twitter and whatnot of just the dog market versus the cat market, and maybe some mean reversion upside there.
I mean, yeah. I mean, that's also. I mean, that's a super interesting question. Is like why have cat related things never really taken off in crypto, other than crypto kitties?
Right.
Like why? I don't know. But
maybe crypto kitties are the reason. It's just PTSD from
maybe.
all crypto kitties going to zero.
Maybe.
And Dogecoin going to the moon.
But crypto. Yeah, I mean the Gen 0 or the Gen 1 crypto kitties go for a lot, but yeah, crypto kitties, crypto, the new ones are not worth much.
Yeah.
But I guess more broadly speaking, I mean, that was somewhat on a light humorous note, but more broadly speaking, I would say probably the category, the sector of NFTs, right, is maybe where it's in a subsector of crypto that I've always struggled to like really get behind. And this might be.
I mean, let's be clear. NFTs are altcoins with pictures.
Right.
Like that is what they are.
Yeah, we're not just talking about collections
Yeah.
too, but like, because this informs the assumptions that go into your model for, say, like a Blur or a Tensor, right? So NFT infrastructure, like you have to have a set of beliefs and assumptions around the underlying assets, the NFTs, and so that's probably an area where it's an area, right? You're constructive on, bullish on, personally and professionally, and it's one where I'm always like, I kind of get it.
Yeah.
I
Well, you know,
dabble.
it's like I thought, because I was big into, or like we were both really big into Solana last year, and I thought like Solana NFTs were it. I thought like, man, this is going to be like they're still kind of relevant in 2023, um, and they did have a bit of a run. They did have a bit of a run, like in October, November, but then meme coins just totally took all the air out of the room,
Yeah.
and now anyone that was like speculating on NFTs is now just speculating on meme coins. Um,
If
yeah,
you if you're
I
in
think NFTs
NFTs,
are
pivot
hard.
to
I
meme
think
coins.
it's hard. NFTs are hard. I mean, there's only a few collections that I would like. I mean, obviously I'm a big fan of the ordinals just because I think that ecosystem is growing and developing, so there's a lot of opportunity there. Um, but outside of ordinals, I think it's really hard.
Yeah, I would not touch any NFTs outside of
Yeah,
ordinals
and
because they're just
the classic argument someone would make is like, oh, not all NFTs are PFPs.
Right.
Um, Which, okay, technically that's true, but like most of the volume on, say, a Blur or a Tensor is PFP related.
Right.
So,
mhm.
like, have we seen any serious adoption of NFTs not PFP related, like in any material way?
Maybe
I
gaming.
mean, yeah, either gaming or like Grail generative art pieces.
Yeah,
I think that's basically it.
but those don't have a lot of volume.
No, not volume wise.
Yeah,
No.
but you need volume. That's what you
Yeah, yeah,
need.
Yeah.
yeah.
Um,
But there's some interesting real world applications, but again, it's still early, whether it's,
yeah,
tickets or right,
Yeah,
the DMVs you hear
tickets,
of, or
ID,
yeah,
stuff like that. Yeah,
yeah, yeah.
titles to
All
certain
that stuff
properties.
is, yeah, all that stuff I think is bound to come at some point. It's just hard to speculate on and really like take
yeah.
a position at this point.
I mean, that's ultimately like if you're like a NFT infrastructure project, that's probably what
Yeah,
you need to
yeah.
focus on that. But it's still, it's early.
But even then, stuff like ID or things like that, like are those really like high volume kind of
Yeah, tickets could be
activities?
tickets could be
Tickets could
decent.
be.
Yeah,
Tickets could be. Yeah.
yeah,
Hmm.
Yeah, I mean, I was on the institutional team at Polygon, right? And we would have all these conversations where people would be like, "Oh, well, we don't believe in NFTs as like cartoon monkey pictures, but like we believe in the underlying technology as a way to represent things on the blockchain." Um, and unfortunately, they got their way because that basically killed NFTs, right? It killed all excitement and innovation around them because
Mhm.
speculation really is this like core life force of crypto, right? And it's just like way too early to be, I think, like spending your time on non-financial use cases, right? Or non-speculative use cases.
I think what we'll see in NFT land is more experimentation that's similar to like this fantasy top application on Blast or like Friendtech or something like that, where you're just tokenizing like just weirder and weirder stuff. And some of that will be fungible, some of that will be non-fungible. And I think like we're in the early stages of the tokenization super cycle. I think like that's really where we're headed over the next like 5 to 10 years. And like every stage, every cycle is just really just a slight variation of like the hypermania of the last cycle. Like I think Matt, you and I talked about this like 6 months ago or something when we had almost this exact conversation where I was like, yeah, NFTs are dead forever and it's just memes. And Matt was like, NFTs will come back. And it's basically just like, nah, every cycle is just like, first we had altcoins and then we had ICOs and then we had NFTs and now we have meme coins. And they're all just speculative vehicles for essentially nothing. But it's just adapting the newest technology to whatever you want to speculate on. So um, yeah, I think that's just kind of the state of crypto right now, and I don't really see that part of it changing.
Yeah. Well, also it's like you have these super speculative manias around a specific like financialization of something in crypto, but that speculation is always enabled by kind of the previous speculation, right? So like, you had the whole altcoin thing in 2013, 2014, but then, Ethereum was created like 2015, and that enabled the ICO mania in
Yeah.
2017, right? And then you can go to like 2020, and all because of the ICO stuff, hey, now you can kind of create these new coins. Like you had the ERC 20 standard, and that kind of, and then you
Hmm.
had like DeFi take off with all this like yield farming.
Hmm.
And then something similar, like you had NFTs 2021, and then arguably like the whole meme coin thing on Solana is kind of enabled because Solana is just like the best for retail, right? So retail can speculate on meme coins. So it's just kind of like this continuation of infrastructure that's just getting better and better. But hopefully we do have like this, as they like tokenized real world assets. It would be amazing if you could have like tokenized stocks one day, that kind of thing, tokenized
Hmm.
ETFs. But
Yeah.
we're not really, we're not there yet.
Right. When we get there, if and when we get there, so where and how does value flow? Like who are the winners? As in the fast forward 5 years, and tokenization is a big thing, and all these assets are on chain. Is it just the layer one, or where do you expect value accrual to kind of go?
I mean,
Yeah.
I personally think that tokenization of real world assets doesn't accrue much value to anyone. It like mostly just saves a little money for the asset issuer, and that's like not even true in every jurisdiction, right? And it depends on the product. And um, I think like, to David's overarching point of like, this is a space where speculation is enabled by new technology, and new technology drives speculation forward. Um, like I don't see a lot of use cases for real world assets that enable unforeseen kinds of speculation, like new novel kinds of speculation, or new people being able to speculate on assets that they didn't have access to before, just because so much of it is like so carefully constructed from a regulatory perspective, right? But I could see maybe leverage, right? So this is the one saving grace is like, if I have my 401k and I could take a loan against it, that would be great, right? And then I can degen into whatever I want, and then roll those ideally gains back into my 401k.
Hmm.
Or if I have like Coinbase stock and I want to borrow against it, like I don't have enough stock to really get a borrow, like a quote, right? But if I'm a whale and I have like 5% of Coinbase stock, of course my broker is going to give me like, capital against that, right? So being able to unlock, I guess, a little bit of the leverage on real world assets for like retail, I feel like that's maybe like a come up. And I think whichever protocol introduces that, maybe that's where value accrues. But in terms of like just like we used to measure transaction volume, right, as like the sort of value accrual mechanism for L1s, right? And it would be like transaction fees. And then you get L2s, and it's like, well, all of a sudden, like block space is no longer scarce, right? So what are you really paying for? And the answer is, well, not much, right? You shouldn't be paying much. And then where does the value come in? Well, like the multi-coin thesis is basically MEV, right? And will there be a lot of MEV in the on-chain real-world asset market? Probably, right? Because you have this mismatch of like centralized exchanges that are going like hyperspeed, and then on-chain like block by block. I mean, on Bitcoin, especially imagine tokenizing stocks on Bitcoin. You can only trade them every 10 minutes. Like that would obviously be like very lucrative from an MEV perspective. And then maybe it goes to the validator, the block proposer, which ultimately should go to the staking token. And so from my perspective, I think it is staking tokens that probably overarchingly like accrue the value. And that's why you see like all these L2s where the gas token is ETH, right? Because it's like we had this tokenomic model, and I'll just keep rambling. We had this tokenomic model like back in the day where you look at protocols like Akash, right, where the value accrual was really meant to be driven by the gas token, right? It was meant to be like a currency, like a true like cryptocurrency, which you use to pay for CPU resources in the cloud, right? And there's like a number of models like this. Celestia is a good one, right? You use your TIA tokens as the currency to buy data availability in blobs, right? And even on Ethereum, like you use ETH to pay for block space, right? But the currency model isn't really great, especially if you have these like newer cap tables where you have VCs that effectively have a ton of currency to dump at a time when like you really don't have that organic demand for the currency. And then it's like M1 money supply, right, where it's like there's only so much velocity that like is going to happen in these like niche economies, right? And so owning the currency token is like really not that valuable, right? So there's a reason why like Arbitrum, like the Arbitrum token isn't the gas token on that chain, right? Because they've decided that it's like a better trade-off to make to just use ETH as a currency and give people like an easier way to on-ramp and off-ramp that, versus having to like buy their token once, they swap it for a thing, the next person takes the thing and sells it for USDC. And so I think like more and more we're going to see that staking tokens, whether that's MEV or block rewards or transaction fees or what, I think it trends toward MEV over the long run, but it's hard to say, in the short run. There's spikes
So
everywhere.
if you have,
Right.
let's say you have MEV on Arbitrum, does the value from MEV go to ARB or ETH?
ARB, right? Because eventually you decentralize the sequencer, and the staking token is ARB, right?
Well, that's the dream. Yeah.
I mean, yeah, if you, yeah, I mean, the problem is you have these like centralized entities, right? And a lot of them raised equity, right? And that's like super problematic for the token holders because then your like incentives are so split, right? So our like off-chain labs, like their incentive is to run that sequencer and like squeeze like that sweet sequencer revenue as long as they possibly can until like there's some kind of like legal action or something that says like, hey, it's a centralized exchange. What the fuck are you guys doing? Like, and I think that's ultimately the only thing that can push them to decentralize the sequencer and drive some of that value accrual to the ARB token.
You mentioned staking token. It reminds me of the kind of Web3 tokenomic design model where they did it with a two token model because you don't want just your one token to kind of go up in price, makes like the game more expensive. So you want one that is another phrasing here is your spending token versus your investment token. And using Axie as an example, right? SLP, Smooth Love Potion. There's no reason really for that price to go up. You don't really want it to go up because it's just the lubricant. It makes the game work, right? And then the idea is you'd have this other token that is I think you were using the phrase in your staking token, or the one that it kind of accrues value that maybe part of blockchain technology. Web3 is your owners in the network, and so some kind of value as the network grows, as the gaming ecosystem whatever grows, some of that value kind of comes back to one of the tokens, in this case AXS. And obviously that model, not just that games model, but that gaming model, that tokenomic design, there's some pros and cons to it. And it's interesting because it's a little bit of a riff on that with these L2s of using ETH for that spending gas token, and then trying to paint a picture for value accrual to the L2 token. And again, this is all on a roadmap, and it'll get better over time with some trust assumptions. But that's the idea, right? And so I don't know. And then the protocols that only have one token, then you're trying to have that one token kind of do everything too. It does get a little tricky.
Yeah. The fact of the matter is that this value accrual is a meme, right? And you're saying you paint a picture and it's on the roadmap, right?
Well,
But
nobody's
like,
trading the ARB token based off of like sequencer profits or like some multiple on sequencer profits, right? Maybe one day that will happen,
yeah,
but that's not necessarily happening right now.
I think a lot of the dumber money does. And when I say dumber, I mean like the more like professional, like they have a 20-year model on sequencer revenue, like cash flow going to the ARB token, and they're like buying it for that, right? But that's like a very first cycle thing. I think is like
Yeah.
you come in, you're trying to
Well,
fit this
it's
into
also
your
I think it's
framework.
also just like a function of like in some sense I think that's kind of fine, except it's really hard. What we've seen in crypto, it's really hard to have a moat.
Yeah.
And so like yeah, you can project out for 20 years, but like the scenario in which that actually happens, the probability of that scenario might be really really low, like way lower than what your model is saying.
Yeah, it's a good point. The moats do dissipate when you have like an infinitely forkable, exciting like space where everyone can build something new every year.
Cool. Matt, you got anything else to ask these guys?
I mean, any hot
This has been
takes?
great. Yeah, you guys got any hot takes? Any predictions for the rest of the year? Anything that your HR team won't get in trouble or won't get us in trouble for?
I mean, I think the trends that we've seen year to date are going to continue throughout the end of the year.
The trend is
Yep.
your friend.
Yeah.
Mhm.
I like it.
Yeah, it kind of brings. I feel like a very topical discussion right now is, um, will the 4 year cycle continue, or is this time different? If it is, why? It seems like the most common answer, if you're in that latter camp, is well, you have the introduction of the market structure is different because of the ETFs, but I don't know. I think this is a little bit of a similar to Dave. I mean, I feel like the history will repeat until proven otherwise. um, right. So I think that's how I'm thinking about base case.
And it could, yeah, I mean, the ETF could just like maybe it just adds, maybe Bitcoin now trades more in line with the macro environment than it did in the past because there's less friction, possibly. Although we did have Bitcoin futures. So,
Yeah, I mean, my hot take on the ETF change to the market structure is actually that it makes it way easier to short, and it makes it easier to short in size. And I think that like we'll actually continue to see, we might see more downside volatility going forward as a result.
I mean, what do you make of the current environment where like we're like altcoins are actually holding up pretty well relative to Bitcoin?
I think it's actually well, Bitcoin held up well the last like couple of weeks, right?
Right.
I think it's just
Yeah, and then
like
As
altcoins got
Walter
crushed.
crushed.
yeah,
Crushed.
yeah. Um, I mean, it's funny, right? Because for alts to really trend upward, the whole market has to kind of be in agreement about something. And then when you don't have something to rally around, like the having the ETF, whatever, right, macro policy, then it's really hard to like for a lot of people to like continue to underwrite holding alts, right? And just like as a percent of the number of people I know, I don't know anyone that's like long Bitcoin as like a portfolio allocation strategy, right? Everyone's like super max like long like the really risky stuff, like whether that's alts or meme coins on the alts or some combination, right? Most people I know like they think of their safe bag as being like staked soul, right? And like we're all looking at it like, well, why would I settle for Bitcoin has what maybe 75% upside from here and like a really bullish outcome, and like why would I settle for that if I think Sol is gonna like do multiple X's? And I think that also like created this much more dramatic sell off in alts over the last week or two because it's just literally the only thing people owned, right?
Yeah. Well, it also could be just like now we have a very different cohort of investors on Bitcoin,
Yeah.
right? Like a lot, maybe in the past you had to onboard to Coinbase and you bought Bitcoin, and then you also bought like maybe a couple of the top altcoins, and now it's like no, I mean you're only buying Bitcoin because it's just in your brokerage account.
One thing that's interesting to think about is in the kind of theme of is this time different? So with this change in market structure, with these Bitcoin holders who only own it now through an ETF, obviously there's extra friction to take gains off of Bitcoin and kind of rotate easily into alts because it's different structures or different rails. You're at TradFi rails versus crypto native rails, and so do you think that you know does that mean anything different for Bitcoin dominance this time around this cycle, or just kind of the rotation to alts now that there's increased friction? Because I started this by saying like I'm kind of in the camp of this, the cycle will repeat until kind of proven otherwise, right? But this is different, and so I guess I have an opinion, but I would love to hear what you guys think too.
I actually don't know if it spells anything different for Bitcoin dominance. I like initially I had thought that maybe it does because this will be a whole different kind of investor class. They'll just be buy and hold kind of mindset. And it's going to kind of separate Bitcoin from the rest of the market. I thought that was true initially, but I like after seeing the last or like this recent move, I don't think so. It seems like a lot of the selling is coming from ETF buyers. It seems like there's a lot of outflows as well. So I actually think that it will probably repeat. I think like whatever effects from the ETF are almost like now becoming priced in or kind of like baked into the market. Um, my hotter take is that Bitcoin dominance could go really high. Is if like ordinals and runes really catch on and leaves a lot of other stuff by the wayside. But that's a whole different thing.
How high is really high?
What do you guys think? I mean, like to the point where it makes like NFTs, which are already kind of irrelevant, but like makes them irrelevant on every other chain, makes like shitcoining way less relevant on other chains. But I think that's a long shot.
I assume Matt is not in that camp.
I don't have any thoughts on ETH BTC or Bitcoin dominance. These are two things that I just like. I look at these numbers; they make no sense to me. I don't know how to contextualize them. I don't know how to form a view, and then I wouldn't know how to express that view, right, in a portfolio. And so, I think like. Bitcoin. So the one comment I have though is that people tend to kind of misunderstand how ETFs work. And like when you see inflows, like my old boss did this back at Marshall Wace. Like he was like, "Have you seen how many inflows there were for Kathy Woods's ETF or something? She's managing so much money now." And it's like, well, sort of, right? It's not like a typical fund where you wire the money to the fund manager and then like they create shares for you and then use it to buy whatever thing, right? The flow is much more I market by IBIT or something, right? And the price of that, like the market price of that goes up relative to like the crypto market price of Bitcoin. And at the end of the day, there's a little bit of an arbitrage there. The authorized participants come in, they buy up the Bitcoin slightly cheaper from the crypto native market, like they buy it or wherever, like in kind, and then they use it to create shares, which they can then dump at like the slightly higher price that I've created by pushing the price up in the stock market. And so it's less of a reflection of like people tend to imagine that it's like hedge fund managers calling the person at BlackRock being like, "Yo, I want to create 10,000 new shares. Like I'll wire you the money right now. Go buy Bitcoin for me." And then they think that like when there are outflows, it's like, "Hey, I changed my mind. Send me my money back," right? And then there's like forced selling. It's actually much closer to just buying and selling of the underlying shares. And that tends to be like, it's hard to track exactly what causes that. But in general, in stock ETFs, it's just like market goes up, there's more ETF creation, right? Market goes down, there's more ETF redemption. Um, but maybe those are the people that set the price at the margin, right? It's hard to say.
Yeah.
I think here's another maybe this is a hot take, would be I think a lot of people going back to like cycles where they think like, hey, Bitcoin goes up first, then it's ETH, and then it's all this other altcoin stuff. I've kind of been starting to think I don't agree with that. And And really, because I think it's more just Bitcoin goes up and then it's just speculative activity, right? And historically, the speculative activity has been on Ethereum. And so that's why Ethereum was kind of the second one to go. But this time, all the speculative activity is not happening on ETH mainnet. And so that's why it's potentially why it's lagging. So it's really just Bitcoin to speculative activity, not Bitcoin, ETH, alts.
Yeah, I think Bitcoin it signals risk on across all crypto markets. And now it's kind of interesting. Like now you're seeing like a lot of times meme coins will like lead the Bitcoin move.
Yeah, that's weird.
It is
I've
really
been
weird.
shocked at how well some of these meme coins have held up since Bitcoin dumped down to like 57.
Yeah, yeah. It is very interesting. I don't know. Where does it like what does that say about where we are in this cycle? You know, like it kind of makes me think we're later in the cycle than people think.
Yeah. It also makes me think we are itching for that next thing. I mean, kind of bringing this back around to, where's that next breakthrough, zero to
We are
one
fishing for it.
innovation, right? Because absent
Yeah,
that, people, yeah, I mean, spend the time, speculating, right? But I think, look, right, we have the VC arm, and so we do get some, kind of just glimpse into the types of projects that are forming and the types of teams that are coming to market and the types of problems that they're working on, and so I think oftentimes crypto gets lumped into this conversation with the AI and this kind of hope and desire of, we really need our Chat GPT moment, right? Where it's just the killer app, everybody gets it, and you can onboard a bunch of users, and I think we need that. But I think as we look at this next cycle, like I'm pretty hopeful that we get one, if not across a couple different kind of sectors, right? And I think, yeah, again, kind of going back to where you place your bets, where could that happen? I think there's a lot of interesting stuff coming in and deep in. The problem with that sector, though, right? It takes longer for that to build out because it touches the real world. A lot of times you're involving actual hardware devices or whatnot, so it's just more involved. But I think it's easier to wrap your head around it. It's tangible, and so I think we just need those constructive, productive, use cases to really kind of take this market and cycle to the
Yeah.
next level. I see it coming. That's where we're at.
productive use cases. It sounds very bearish.
I mean, it is the key
That's
to
what we need,
it
though.
is the
That's
key
what we
to
need.
growth.
Yeah, no, I could not agree more. Obviously I'm just, I'm memeing a little bit, but yeah, it does feel like we're like in that in between phase where there was just way too much hype in the last cycle. Obviously there's still just way more hype, but like it feels like we're kind of in that moment where next cycle there will be tons of actual mainstream applications that people are actually using. Um, Even like stuff like you see like Get Grass or like Helium Mobile or things like this that people that are not really even in crypto are using. Like you start to see that at the fringes, and it feels like a few years from now we'll see that kind of across the board.
Yeah, and at least every cycle the infrastructure is getting better and better and better, right? So that also just enables more interesting applications.
Yeah, because it's really like
Yeah.
we need that next wave of adoption, not that next thing for
Hmm.
all of us on this call to do, right? Like we need, the rotation is fun and interesting, and but we need that next wave to come in, and they're going to come in when there's that next thing to do,
Yeah.
to get the step function change.
Cool. Any final thoughts from anybody here?
It's going to be an exciting year.
Cool. Yeah, that I agree with.
Buckle up. It's going to be a big
Yeah.
week.
Yeah,
Well, thank you guys very much for coming on. This was an amazing podcast. Went longer than I think we anticipated as well. We had a lot of fun. Yeah, where maybe just to close it off, where can people find your work? Where can they find you on social media or wherever you'd like folks to come find you.
Yeah, David, you want to mention?
Yeah, I mean, I would point to, you could go to the Franklin Templeton website and go like to insights, and you have to filter down to like just disruptive technologies to find a lot of the crypto blockchain related content, and then also Franklin Templeton Digital Assets account, which is at FTI_DA,
on that.
and that's where we've been posting a lot of the research.
But maybe we can include a link in the show notes. But yeah, we want to keep dripping that out on a pretty regular basis. So that's where you can certainly find more. And yeah, this has been fun. Glad you guys had us on.
Yeah, David, Christopher, thank you so much for coming on. It's been the Decent Crypto Podcast. We'll be back next week. Until next time, stay decent.